Good morning, guys. Can everyone hear me okay? And is the screen coming across well? Okay, great. So let's get started this morning. Overnight, it was interesting. ES tried to break to the upside. It failed to do so. Again, we keep getting trapped up here in this multiple top high, right? And we're definitely trading below it this morning. Apparently, IBM is weighing on the market. NQ tried to break out and failed back below as well. We had Globex high overnight on NQ, by the way, which I have not marked off, but let me get that on the chart. You'll want to add it to your charts this morning. And the Globex high is sitting up there at 36.21, which is right in this zone right here. And I just haven't had a chance to finish off my NQ chart this morning, despite getting most of it done last night. So I apologize about that. But Globex high is sitting here. And so one of the things I wanted to take a look at first out of the gate, before I go through the expectation real quick, is just the volume profile chart and where the balance is setting up there. And if we look on the if we look on the daily, you can see we're just in this huge balance area, right? And really, you have to start assuming that unless we can get above this area right here and hold above, that there's a problem somewhere, right? Because we need to break the longer we sit here. If we can't break above, eventually these buyers, the late buyers, will get tired and presumably come in, and we could go back to the bottom end of this range, right? Which is either this 1820 area followed by 18010 and then 1805, 1804, 1806, and then 1799, 1801. Right, those are all key levels below. More likely than not, however, if we fail to break, we'll simply just travel to the bottom end of the range, maybe break below again, then come back up and travel back up into the middle part of the range, and then we'll have a decision point at some point. That's the more likely path. We need something to move the market, and we simply don't have it right now. We had, I don't normally pay attention to earnings, but there were some tech companies with some good earnings out last night, counterbalanced by what IBM had. So, in terms of getting long anywhere up in this area between 1840 and 1845, right? Without what you're betting on is that we're going to break on this upside, and you really open yourself up to getting hit on a downside move. And I would, at this point, would rather see us break above or gap above, come back up, backside test, and get long, or find some entry somewhere in this entry area to the long side, rather than trying to guess whether or not we're going to break, unless it just happens to be a trailer and it breaks up on the trailer, right, from levels lower. So that being said, that's my general premise for the day, is that up in this area, I'm going to need the market to prove it to me, because it's simply, we've failed to be able to get above. And if you look at this same chart, you can use any method you want. We'll just look at the 24-hour volume profile chart instead. Is that what we're getting on ES? Let's bring this in just a drop. Right, is we are getting consistent, and actually Raj pointed this out. I didn't exactly catch it myself, but this is that 1845 level right here, approximately. And overnight, we keep poking our heads out above it. We were unable to do so last night, by the way, but overnight we've been poking our heads above that 1845 level and then falling back in. And so it's only natural, right? If you look at this, you can see, well, this is approximately the main area balance that we could travel back down to the bottom end. And then if we break, because it has been tested once already, we broke it and recaptured, right? And it works just like a support level. Each time we break below, it'll get weaker and weaker. Just as this will get weaker and weaker as we keep testing on the upside. However, we continue to fail. We continue to fail to be able to hold above. We could easily fail below, and that would take us down to that 18010. And everyone and their brother is waiting for 1804, 1806. There should be responsive buyers here the first time in. I know I'm certainly willing to take a loss at this level if we get down here. So let's go to the possible scenarios as well here real quick for today, and I'll wrap up the executive summary. So So on ES, knowing what we know, right? First of all, first thing I'm watching for is a potential for an open drive higher, right? We're trading back up at the 1839 level, and I'm going to be keeping my eye, obviously, on NQ. It's been stronger, and it's only a few points off of that overnight high of 36.21. It wouldn't take a lot to break us up into that area. So first thing I have my eye on is, first of all, can we sustain above? Can we sustain above the gap fill, right? And even with that, my white zone today is sitting just below the Globex lows. I didn't want to move it. Normally, I would just simply widen the zone, but my idea is that we'll probably violate that Globex low slightly, come into the white zone, then get back above and trap traders for a move back to the upside. That's my guess, right? Remember, off the open, you're going to have a lot of volume and a lot of weight, particularly on the Dow Jones, not necessarily the S&P 500, but on the Dow Jones, because IBM is a component of that. So you're going to get a lot of market orders out of the gate that'll press on, or should press on, the Dow Jones Industrial, and to a lesser extent the S&P 500 off the open. So assuming an open at just below this 1840, my hope would actually be is that we come down and we get below gap fill, come test Globex lows and get into the white zone, preferably with a little bit of push. Remember, I want a 6-point rotation down into the white zone, right? So if I need from the front, in that case, I actually would need it to test 16, let's just call it 1834 would be the front of the white zone by a tick, right? So I need 1840 tested out of the gate to give me a nice 6-point rotation. That'll let me know that I want to take the front of the white zone. If I don't get the front taken, I just want to calculate whatever the swing high is once we open up, and that'll let me know whether I want to take the front of the zone or the back of the zone in the white zone area. I hope that was clear and that makes sense. But I most likely I am willing to sustain a loss into the white zone this morning. First time through, exception being if we get an open drive down in the first 15 minutes before we get there, in which case, if it looks like we are simply driving lower like this, I'll have to reconsider. But in most circumstances, I'm probably taking a trade the first time into the white zone, right? We're always watching for open drives, right? Now, if we get an open drive lower, right, what am I going to look for to let me know that we're not having a trend day down in this case? Well, first of all, the first 3 candles, right, will all have lower lows and lower highs. The first candle, right, will be the high of the day. This is for the case for an open drive lower or move lower, correct? The first candle will be the high candle of the day. We will have 3 candles will be distinctly low. Each following candle will put in a lower low, right? And usually will not penetrate the previous bar's high. Tick will be relatively negative and stay significantly negative, right? And once we get this drive, since we're opening near gap, what it'll simply be an indicative is we'll be unable to get back above gap fill, right? So if we did something like this, drove down, even if we get a response out of the white zone for 2 points, right? If we're unable to recoup gap fill, then that would push us lower, right, down below the white zone, at which point sellers would have definitive control, and we could easily roll down into this into initial support, right? And then below initial support, which was yesterday's low, right? If we get below that, we could easily come down and test this 1815 and a half to 1817 and a half. That's where I'd really like to find responsive sellers the first time. There's an open gap there, right? And my guess would be at that point, we can either push back up into initial support where we'll have a question mark, right? If we can regain initial support, it can push us back up into this 1830 zone, or we get a reflection back down and then close either near the lows or at lows below there, right? So this gets really hard to predict in this particular area, and it's not really a prediction. It's what a possible path we could follow on the downside. That would require, first of all, us getting below and staying below the white zone, and I don't see that happening today, even with the IBM news. But that's how I think it would develop if we do develop. Again, I am looking to take a trade depending on what the swing high is out of the gate in the white zone. It'll be a 6-point rotation lower. I'm willing to take the loss here. I'm going to be clear on that. Let's look at what the upside scenario might look like. So everyone and their brother knows that IBM's numbers were bad, and the market's not really reacting that terribly to it. So if we open here at 39, That's essentially a hair above Globex highs. If we open and go, let's use another color besides this. Right? First thing I'm looking for is open drive higher, which will be categorized by something like this, right? Again, I want a 6-point rotation. If we open up at 1839, right, that means that I need at least 1845 to even consider an area for short, right? If I get these first 3 bars, tick goes extremely positive and stays above zero early in the going, and we fail to test the gap fill, right? That'll be my first clue. This has been a big area to get through, and you'll notice the zone is wider than normal. It's 1843.50 to 1846.50. It's actually 3 points, and that's what actually encompasses the regular trading hours year-to-date high, right? So the zone's a little bit bigger. Keep that in mind. I would also look for tick divergence in here to help guide you as to whether or not you want to take this trade in this area or not. But I will most likely will attempt to short. The risk is that buyers flood in, right? Everyone's been on the sidelines. We've been in balance. So I would expect a move either up or down coming up here, right? And we've been unable to sustain the move up, which is why I'm giving the downside scenario. But I am expecting us to move out of this 1830 to 1845 range that we've been stuck in either today or in the next couple of days, right? We're just really getting chopped in this whole area, which is making trading a little bit more difficult. So, excuse me just one second here. So if we, it is possible that we can break this zone in a drive higher, right? Again, I'm looking for this to protect me. If I have an open drive higher, I'll be a bit more cautious in the zone. Hopefully I can call it in real time. What I expect is more likely to happen today, right? So this is a scenario, and then if we get above here, right, I expect a backside test and then a push up into initial resistance. I will take a short the first time into initial resistance, and most likely if we drive straight to it at the front of the zone with a 4-point stop behind it. That's most likely going to be my trade location. For more conservative traders, you may want to wait for tick divergence at this zone. Sorry, my voice still isn't back exactly yet, right? So let me be clear again on my summary. Barring an open drive lower where the first 3 bars are going straight down, my intention is to take a trade into the white zone the first time with a 6-point rotation, and assuming the proper rotation, I'll probably take a trade on each and every one of these zones coming into this unless we consolidate right above the zone. Okay, I'll call it if it changes, but again, assuming my minimum rotation requirements, I'll take a trade. Same thing here. The only place I have a question is if we drive up into Friday's highs, I might want to see tick divergence here. Other than that, I will most likely take a trade first time into the zone here, a counter trade. You also got to remember, we've been having a lot of trend days. I'm a counter trend trader. One thing that has been keeping traders very safe, if you look the last couple of days, right, is the 25-minute rule. If I take a trade and I sit in that zone for 25 minutes, all you had to do to minimize losses or eliminate losses was simply go in and cover that trade after 25 minutes at a small loss, right, or no loss in many cases. And if you look at yesterday's chart, you'll see 2 of the 3 examples where that saved you significant losses, very small losses, and the one time it failed, the zone simply busted. And I simply have no way of predicting when a zone's going to get busted through. It's a rare event, and I think that's a result of just having this extended chop range that we've been going through which it really is going from 1825 all the way up to 1845, and we've just spent an immense amount of time. Let's look at NQ really quick. So overnight, NQ drove all the way up into this range right here, and we're currently trading at 36.17, which puts us just above yesterday's highs, approximately right here, right? So this is going to play into my overall picture, right? What do I need to see in order to think that ES and NQ are going to fall apart? And I'll be keen off of this, by the way. I need to see NQ get gap fill, first of all. I need to see it fail gap fill, fall through, and then fail to get back above this high. If that occurs, it would open us up for a trap trade that would push us all the way down, potentially to the other end of the range, right? And we could simply end up with balance again from here, where we simply trade this range all day, one scenario. if we get below yesterday's lows, it could obviously push us down into zones below. I would look for good stretches. Aggressive stretch is 10 to 15 points. More conservative traders will want a minimum of a 30-point stretch on NQ before taking contra trades, right? So you got to know who you are. I do expect rotations at each zones, but NQ is more difficult. It doesn't have the same institutional participation in terms of volume that ES does. So the rotations are not as predictable in those areas. So the downside scenario, again, I first need to see it come below gap fill, right? Not reject back up. I need to see it fail below, have the inability to get above yesterday's highs, and then I would expect to push to the other end of the range. Scenario B and more, actually, I guess this will actually be scenario A, and I think it's more likely in this particular case, right? We open up in this area, this 3618 area. We're either going to do one or two things. We're either going to open drive higher and push straight through this zone, right? So I'm going to be cautious. There's not enough rotation for me to take a short in this zone straight up, right? And if we break through here, I'll actually probably be cautious on any short on NQ without a 40 to 60 point rotation higher first, because I don't want to get smoked, right, in the process of trying to find a short entry. If we open here, drive up into Globex highs, then one or two things can happen. We can come back in and make an attempt for gap fill, which is right here, or half gap. And that's really going to tell the story of where the market's going to go today. I believe we'll be on NQ's shoulders, right? Even if ES is lagging because of IBM. If we only get half gap, or we fail to even get half gap, I'm going to actually assume trend day up in NQ. The news is quite positive. And if we look at, in which case I'll probably be very reluctant to take shorts and look for rotations lower to get longs. As long as we hold above yesterday's close, I will be very reluctant to take shorts until we get up into probably, let's see, 3609. I haven't finished my extensions yet, but certainly 3650 to 3670, somewhere in this neighborhood, will be where I'm looking for some type of divergence to confirm that I could take a shot to the short side. And it looks like we will right now push at the highs off the open on NQ. So again, this scenario is playing out more likely. What's the reason for that we're looking at? Well, let's go look at the volume profile chart real quick. On the volume profile on NQ on the daily, while it's very large, we have been trading in a consolidation pattern up and down through here, right? So if we're opening up at 3620, just below 3620, right? That's a gap out of a base. It could easily have a trend day up. So really at this point on NQ, unless I see this fail back into the range, right? My scenario is long. And because of this, my primary scenario is going to be long in ES until I see the market prove otherwise. What will have to occur for the market to prove otherwise, and what information will that give me, right? Well, if I see us break, then we fail back down and we get back below into this range, right? I'll know something's wrong and that we're likely to push to the other end of the range. I'll also be cautious for a head fake like we had yesterday, right? Responsive sellers came in. Let's say IBM weighs a little bit heavier on the market than we thought. We push back into the range. Then we push back up and hold above. We could still end up with our open drive higher in the afternoon, okay? And so I'm cautious. I am cautious on the short side right now. Just simply hasn't been paying very easily, particularly in NQ. The long has simply been easier, and we haven't given back. Nothing in this chart, right, says bearish. Even here when we consolidated, we had a much wider consolidation range. This has been a very nice, tight consolidation pattern, and we've had 4 days essentially in a larger balance pattern, and essentially this is what I'm expecting, right? And so either I want it to break out, come back for a test and go higher. I'd look to enter on this test. And on the downside, right, we'd have to get failure, which we're nowhere close to. I don't want to see us break down, come back for a test, and then move lower. I have no idea if it would give me this backside test, but it sure would be nice, right? And I think that NQ will pull up ES. So that's the end of the executive summary. Like I said, I'm cautious on the short side. I'm not going to hang my hat on IBM. IBM's an old freaking company. Everyone's more interested in old tech. Does anyone have any questions before I move forward? Did I cover all the bases? Does everyone have audio? Ethan sent me a message that there's no audio. Can everyone else hear me? Ethan, I'm not getting any other messages, so okay, great. So let's take a look at the. I want to take a look at the tick charts real quick. Actually, I'm going to bring this in more. Let me change this to a 1450 tick chart. Okay, so I've had this trend line here, this channel, sitting for quite a while now, going back weeks actually, if you look back on some of the older reviews, right? Where if you look, we're essentially, all we've been doing is we had a move down, we've had our move up. So this is our AB, right? And this is our consolidation back if you're looking at a pattern, right? So the pattern that I'm possibly looking at is AB, right? And then the question is this starting a new CD, right? So, and where would that go if that were the case? Where would this go if this looking for a potential upside target, right? So the way I do that is I'm going to, again, my executive portion of the summary is over, guys. If y'all need to drop off, it's 3 minutes to the open. Go. Click, and then so if, again, and that's a big if, right? But if that's what we're looking at on a larger pattern, then it's going to look, oh, hold on a second here. Okay. Then we could end up looking like this, which eventually would take us up to an 1860 level, right? And that obviously is not that shocking, given that we're sitting at 1843, right? If we end up with a 20-point up day, that would get us. Actually, we don't even need 20. Actually, 20 would get us exactly to this 1860 level, right? So that's certainly a potential AB equals CD target, right? And as you can see, even though we've had a wide range in the bigger picture, right, going back to the 1st of January, we really haven't had that much of a consolidation back down. You certainly wouldn't say this failed. As a matter of fact, this area right here, and you might want to mark it on your charts, this was approximately right here, was half back from this base, right, on the run up to here. On the run up to here, this was approximately half back. We've tested that, and now obviously what we need to get above is this level right here, right, in order to get a move higher. Again, it's failed in this area repeatedly. I have to see it clear above before this scenario becomes accurate. Otherwise, in order to fail, we clearly need to be below 1825. And most of the time when we've been coming below the bottom end of this trend line, it's simply been to trap sellers late and produce pushbacks up each and every time from these levels. It has tried it 3 times. The more it tries it, the weaker it gets. But I want to see the evidence with my own eyes. If it breaks down, there'll be plenty of opportunity to get in on the short side. I'm not overly concerned about that whatsoever. Looking at NQ really quick. Again, let's do a 2000 tick chart here just to get a bigger picture look. So what I see here on this picture, right? Very large picture coming back into December, right? This was my prior area of trading range right in here. We've broken above and consolidated above. We've tested in twice, and we've had a series of higher lows each time, right? Does not mean we'll break out, but where we're currently trading up here at this 3620 area, right? I want to see us trade below 3610 and then below 3600 before I get overly excited that we're going to get any kind of push back to the downside. We've simply been consolidating, and there's been no sellers from this drive up. Again, if we're going to have this as if this is an AB, right? If that's the case here, right? Let's measure what a AB equals CD would look like in this particular formation. So let's do that really quick. So that's our potential. And this is our consolidation point, right? AB, then we get a CD starting from here. Put me roughly at just below 3680 as a final potential destination, right? If this is true, AB equals CD, and we get a pullback, right, like this, if that's what that's going to equal, this is our potential destination. You also got to be aware that we could have a double length, right? CD is 2 times AB, which is, if that happened, wow, it would put us well over 3,700. I'm not even going to bother drawing that. I don't think that's remotely a possibility today, right? But reaching that 3680, again, would not be a stretch. We're trading just below 3620 now, right? So if we were to have up a 50-point day today, right, that would certainly get us right there at that 3660 to 3670 from where we're sitting right now. And up 50 is not unheard of. So those are the things that I'm looking at. I don't have much else for the day. I just wanted to spend a moment and kind of go through those charts. I'll post more charts as we go through the day. Again, I'm not chasing up. I need an entry in. And at this point, I don't have one. I'll call it as I see it. My name is Simon. I'm a Trade and Perform Coaching. I appreciate everyone joining this morning. And I hope everyone has a great day. If you have any questions, you can hit me on Gmail, tradeandperform@gmail.com, Twitter, or StockTwits.